Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. Today, we got a recap from George at Cryptos R Us. Had another one of his last week. And it's just a great way to summarize what took place this week. If you've been under a rock, then you might have missed all of this. And rightfully so, because it's already bounced back. So TLDR, markets tanked a little bit. It's kind of what would you call it, man? Like Chicken Little Sky is falling. Yes, they drop, but if you are following the Raoul Pal, don't fuck this up thesis, then you should not be worried about any of these pullbacks, especially in BTC, because you are dollar cost averaging and 80% of your bag is in the top three. Well, not top three, but Solana, yeah, Bitcoin, ETH, and if you go out farther on the risk curve, SUI. So all I can really attest to is Bitcoin, and that, yeah, I'm still up, no big deal, nothing bad happened. But it does have blood in the streets. So let's find out what happened from George.
To do about it. First things first, why did everything go down? Well, overall, this week has been a correction week, right? The FOMC meeting obviously didn't go so well, but today people were looking at jobs report. And the jobs report came in very under, okay? Basically, it was like under 100,000, way below estimates. So it came in, it wasn't a good one. Just shows that the US is really not hiring all that much. But the worst thing is there was a correction. And this is something that I've never understood why and how we could be so off. So the last 2 months, we had reports totaling about 260,000 ads. Now that has been revised downwards drastically, I think to like 37,000 over the last 2 months. And if you combine that with today's report, basically, there's been zero growth, zero job ads, basically, over the last 3 months. Sure, there's a little bit, but there's also a lot that lost their jobs too. So, I mean, essentially, it's a tiebreaker. Basically, we added no jobs, and what's frustrating is how could we be so wrong? This correction was the largest since 2020. So it's been 5 years since we had a really bad revision. And the last time we had this, back in 2020 during COVID, we had a revision of like 800,000 that was off. So I've always wondered about this. How could someone that's just gathering all the data be so wrong? Or the jobs report is completely fake and they're just changing it to fit whatever narrative they want. So
George is smart. He knows that it's the latter. And if you have more than two brain cells, you know that it's the latter. As Jeff Booth says, the natural state of the pre-market is deflation. And in order to have a natural free deflationary market, that means it is not controlled. The opposite of free is control. So the market that we currently live in is controlled. And one of those narratives or strings that they pull would be the jobs data. So what he's talking about specifically is this report. This is coming from The Guardian, but you can find it on multiple other news sources. So the Bureau of Labor also slashed the number of jobs added in the recent months. May's job figure was revised down 125K from 144 to 19,000. And June was revised down 133 from 147 to 14. 258,000 fewer jobs. So like he said, if your job is to only just report numbers, how does it take you 2-3 months later to come back and go, oh yeah, we miscalculated by 260,000 extra jobs? Like, how do you do that? You don't. It's just false narratives. It's all meant to just show one thing for a specific point in time and then spin the narrative and go, oh yeah, we made a mistake and here's the actual numbers. But it doesn't matter, because the bullish part about that, which George is going to talk about, is that this is one of the mandates that the Fed has. And because of that, there are going to be rate cuts coming in the future. So bad jobs data is actually good for rate cuts. So, and ironically, Trump announced that he was firing the federal government official. You should fire somebody who, can't just calculate numbers. Like, if that's your only job, to publish numbers, like, you should get a spread of, plus or minus 3 to 5%. But this is plus or minus like 90 some odd percent. Like, you can't be that wrong. That is crazy. It doesn't make any sense, but it does make sense when you understand that it's all about a control narrative and them just feeding us whatever they want, just like the CPI data. So these are all numbers that they control to help spin a narrative to get us to march lock in step with whatever it is they want us to do, or get us to look in the direction that they want us to while they're manipulating something else somewhere else.
The asterisks. There was only two ways, okay, to kind of convince Powell to cut rates, or the rest of the governors. Basically, it's either inflation goes down, or number two, jobs go down. So after today's revision and today's reporting, the September percentage went up all the way. Now it's like at 90% for a cut. Even though Powell did say, well, we're not sure about September. Now it's looking like it's going to happen. Powell has to do something. Even though inflation is not ticking down, it's clear that the economy isn't doing as well and businesses are not hiring as much. And that's probably due to high rates and stuff like that. So that's the asterisk, that the percentage for a cut in September now has skyrocketed. So that could be good. I think, we will get a bounce back because of it. Today was just one of those days. Everyone panicked, everyone sold, and that's that. But in the coming weeks, I think we'll see the markets bounce back because traders realize, okay, we are going to get that cut. And someone today said that maybe we get a 50 basis point cut in September because we missed out on this one back in July. So that's always a possibility. We saw that happen whenever, I forgot the exact day or month that Powell started cutting. The very first one he did was a 50 basis point cut. So that could happen in September. Now, something else.
So over on the New York Times, they got an article where they said Fed officials have said repeatedly that their decision on whether and when to resume lowering interest rates would depend on data on both employment and inflation. On Wednesday, Mr. Powell reiterated that the Fed was prepared to act quickly if the labor market showed signs of weakening. Then you come over to Politico.com, CME Group sees a 75% probability of a September rate cut. And on Morningstar, the bonds market sees 80% odds in September, up from 40% earlier with the bad jobs data. So that is the silver lining. But again, for all of us, if you follow me, then you have adopted the don't fuck this up thesis and you're all about stacking sats. Then none of this should actually affect you. You should be worried. You're not trying to trade Bitcoin. You're not worried about any of this stuff, because that's how I feel now. Like, I see these dips and like, I'm no longer bothered. When I was sitting heavy in shit coins, man, I was like, when are we going to catch a break? And just watching the chart go down to the right, further and further and further. And now with BTC, like, I'm just accumulating at these levels. I think my average BTC price when I started dollar cost averaging aggressively this year is like 108, 112. I can't remember. I showed you guys on screen. But basically, it's right around where we're at. I know the portfolio is still up. Matter of fact, that is exactly why I made this. Let's take a look at this portfolio. This one is buying $50 worth of BTC every week. And as a whole, it is 10% on the gain, like 8% in total. The average BTC price is 97K. So if you would have been following this, like, obviously this is a little more risky. You didn't get as much of the BTC gains, but that's the whole point. Again, of don't fuck this up, 80% into the top tokens, the bulk of that being BTC, ETH, or Solana. And if you did that and you've been doing that, then you would be fine. Like, even Solana, you're down 1% with that strategy. Sui, you're up a little bit. So if these were in your portfolio, you're not outperforming Bitcoin yet because altcoin season hasn't ran, but that's why you don't have a heavy weighting in these. And that's why you can watch this kind of stuff and not be phased by it, because you're DCAing and you're not trying to time the market, and you've got a heavy weighted portfolio in the non-risky assets. So for me, like what George was saying, yeah, I'm still happy. He said everybody's not happy. I'm happy. I don't have any issues because I don't plan on selling my Bitcoin, and I continue to dollar cost average literally every single day. So this extended cycle, to me, like this chop consolidation, is amazing. I am loving it compared to where I was sitting 4 years ago in the previous cycle. Let me know what you guys think. Where are you at? How's your bags sitting? Are you upset? Are you one of those ones, like George said, that's not happy? Or are you like me? You're happy? And you know what? Clap your hands. All right, smash that HBO special. Help brother out. Like and subscribe. Comment down below. And until next time, lift daily and achieve your impossible. See ya.